Well, we saw record performance again in the new customers that are coming into the segment. Our new customers grew at 70%. And the good news is our existing customers grew at 40%. So we think folks are continuing to see the attractiveness of the vehicles we make, the ability to get outdoors, whether it's on a pontoon boat or a four-seat RZR. And, we've spent a lot of time and money investing strategically to make sure we can cultivate those new customers. We also keep an eye on their repurchase rates. And what we've seen in 2020, the new customers that came in, they're repurchasing vehicles at a higher rate than they did in 2019 or 2018. And we know that correlates really well to continued growth into the future. So we've got a lot of confidence. And, as we talked about on the call, we're adding more capacity within the business, everywhere within the business. And so we're very optimistic about the future of the company.
Maybe some concerns about margins, Mike. Obviously, costs are rising across a number of industries. What's happening with yours and across the supply chain? Any issues?
Yeah, I mean, we're seeing a lot of the same supply chain issues that many folks are seeing. The ports are jammed. We've got suppliers dealing with COVID constraints. Our team is beating the rest of the industry in terms of performance, and it's a big portion of why we were able to gain share, continue to gain share in the quarter. Our costs are up. Now, what didn't come through as clearly from a lot of the analysts is we are pricing for that. The problem is when you price equal to what your cost is, you're going to dilute your margins a little bit. And that's some of what we're dealing with. But net, we're in a better spot, and we're doing what's right to get vehicles into the hands of the consumers. And we're able to leverage that all the way to the bottom line by holding the line on our core operating expenses.
Mike, does the chip shortage affect you or not really relative to the traditional autos?
No, it does. I give our team a lot of credit. They saw it coming. They mobilized very quickly and were able to go out and secure advanced buys. We've got visibility in terms of our supply out through August. The advantage we have over autos is we make less vehicles, and our vehicles have less content that's semiconductor dependent. And so that gives us the ability to continue to maneuver. And the team has outperformed. We've had to spend the money. Obviously, semiconductors and the components, the prices have gone up. But again, we're doing what's right to make sure we can fulfill demand and keep our dealers moving.
You're also working on electric vehicles. Harley-Davidson, your big motorcycle competitor, has a new live wire EV bike. Do people really want this? And do you think they're going to be willing to pay more to buy EV motorcycles and EV power vehicles?
Well, we had an electric vehicle motorcycle back when I first joined the company, and it actually didn't do well. We learned a lot through that. Our partnership that we announced late last year with Zero Motorcycles is actually to jointly develop powertrains for our off-road vehicles. We've done a couple of tease videos for a all-new electric Ranger that's going to be announced later this year and for delivery in 2022. And that's a segment where we already have a lithium-ion enabled Ranger, but it's just not that great. And so we realized that the market's there. Consumers have been asking for it. We know that it will open the aperture for new consumers. We're really excited. It's got even more capability, obviously torque and other aspects that come with that. The best part about that partnership is they work the things they work best, which is powertrain development. We do the things that we do best, which is working the architecture of the vehicle and the chassis. And when you bring those together, we think it's going to make for one of the best off-road vehicles in the industry.
Mike, I wanted to bring it back to the headline outlook, kind of similar theme to Sarah's first question. But, I mean, presumably, as you go through the rest of this year, the comps are going to get a hell of a lot harder and your year-over-year growth will drop significantly.
Yeah, I mean, one of the things we talked about on the call today is, we expect our retail in the second quarter to be down. We think retail for the year will be about flat. Last year in the second quarter, we posted 57% retail growth. So that's a tough comp. One of the things that we've encouraged folks to look at is we go back and compare ourselves to 2019 before all this started. Our second quarter will be up double digits. We anticipate the year will probably be up about 25% versus that baseline. So from my standpoint, that means the industry is still healthy. We think it'll fuel growth well into the future.
Shepard Smith here. Thanks for watching CNBC on YouTube.